Welcome to a video on how to get 100% financing for your next real estate deal. So every real estate investor wants the same thing, 100% financing, the whole deal funded, nothing out of your own pocket. And today I'm going to show you the exact capital stack we use at gapfunded.com to fund real estate deals at 100% using standard market purchases. No seller cooperation required, no equity partner, and no cash up front out of your own account. So welcome to Gap Funded. I'm Mick Wadley, founder at gapfunded.com. At this point, we've helped over 5,000 investors and business owners across our network access the capital they need to close deals and scale their portfolios. And today we're going to cover one thing: how to fund real estate deals without using your own money, giving up your equity, or handing profit to a partner. So let's actually explain what 100% financing means and how it works. What 100% financing actually means. This phrase gets misused constantly. When most lenders advertise 100% financing, they mean one of these three things. So 100% of the purchase price, rehab, closing costs, and reserves still need significant cash from you. You got 100% of the after rehab value, only covers everything if you're buying far enough below market value. Then we got 100% of LTC, so purchase plus rehab, but closing costs, holding costs, and reserves remain your problem. So true 100% financing means total out-of-pocket costs to an investor zero. Purchase, rehab, closing costs, holding costs, and reserves all covered, and it's about layering the right tools so every component's covered by structured capital and none of it's yours. So this is why investors never achieve it. Most investors think about funding in single layers. Get a hard money loan, done. The hard money lender covers 70 to 80% of the purchase and rehab. So they assume the rest needs to come from savings or a partner. And what they're missing is the stack. Real estate funding isn't one product. It's a layered system where different tools cover different components of the same deal. And when layered correctly, the out-of-pocket number goes to zero. So investors who've figured this out aren't richer or have better credit than you. They just know about tools you haven't been shown yet. So the three tool stack for 100% financing really comes down to layer one is your hard money. Most investors already know this covers the bulk, fast, flexible, asset-based, and this is your foundation. Layer two is the unsecured capital covering the down payment, shortfall, closing costs, and the initial rehab draw. And this can be typically deployed in 24 to 72 hours, no equity split, no lien on the property. Then there's layer three, 0% business credit. So zero interest capital for rehab, draw floats, holding cost reserves, and overrun buffers. It costs around 3% to liquidate via a program called Plastiq, a fraction of hard money interest. So stack all three correctly and the deal's 100% financed. Your savings account doesn't move, your equity stays yours, and your profit stays yours. We can all scale faster. So layer one, the foundation. Hard money lenders lend based on the property, not your income, tax returns, your employment status. They care about purchase price, ARV, and your rehab plan. So what they'll cover typically, depending on your experience, is 70 to 80% of the purchase price, 100% of the approved rehab budget, released in draws, so you still have to cover it as you go. And so what you could expect is a 10 to 14% interest, terms of about 6 to 18 months. This is why they're used for fix and flips. Close time, 5 to 10 business days, and typically to get started, you need like a 650 to 680 credit score. This is the largest layer of the stack and the fastest to access. Now, the gap it leaves, the 20 to 30% of the purchase price plus closing costs plus the float between draws, is what layers 2 and 3 cover completely. So layer 2, this is the most misunderstood layer. For the down payment. Gap funding is a short-term unsecured capital, no collateral, no lien on the property, no equity split. You pay it off when the deal exits, sale or refinance, so it can be used on a flip or a BRRRR. And what it covers is the down payment, shortfall, closing costs, earnest money deposit, first rehab draw before hard money reimburses. And typically we can go and get 20 to 120K, roughly 40 to 50% of your personal annual income. Deployment, 24 to 72 hours. And the minimum credit score to even get started here is 650, stretched out over a 3 to 5 year term, no early pay down period. It's unsecured, and that's key. So it's not a second lien, no conflict with your hard money lender, and you keep 100% your equity and 100% of your profit every single time. Often hard money lenders will actually pull back their approval if they realize you've got a second lien on their loan. So layer 3, 0% business credit to free up capital. Stack up to 4 business credit cards from issuers like Chase, American Express, and Citibank, targeting 0% introductory APR periods of 12 to 21 months. The business cards from major issuers typically don't report utilization to your personal credit file. So 50K balance won't affect your DSCR refinance qualification. And turning credit into cash via Plastiq, typically around a 3%. It's like any merchant processor. If you've got a business with a merchant processor, you can actually just do it through that. And this can be money used to pay contractors, suppliers, lenders via bank transfer. So on a 40K credit card stack, you could expect to pay Plastiq 1.2K. So that's as opposed to if you got that money through a hard money lender, it'd be around 2K. So you're paying 40% of the cost at 0% interest. What business credit covers? So rehab draw float between reimbursements, monthly holding costs via Plastiq, materials, supplier payments, refinance reserve requirements, overrun buffer because every deal needs one. Roughly 10% allow for that. This is a little known trick. So the double stack, doubling your limits. Run personal and business cards simultaneously. That's the double stack. And you could roughly double your available limit in a single run. So if you're really going hell for leather, 4 personal cards plus 4 business cards at 0% APR on a strong profile of potentially up to 150K or more in zero interest capital on one run. So here's the trade-off to be aware of. Personal cards do report to your personal credit file. So maxing them out temporarily will compress your score. Typically we see 50 to 100 points while the balances sit there. But once paid down at exit, utilization hits 0, your score bounces back within 30 days. Now that you've got a thicker credit profile. The golden rule is to lock in your gap funding before personal cards go up in utilization, always. Apply for new personal credit while personal cards are maxed. Done correctly, the double stack makes larger deals achievable without a single dollar of your own money. So let's look at a full deal walkthrough, 100% finance. The deal, fix and flip, purchase price at 170K, ARV at 255K, rehab budget 45 grand with a timeline of 5 months. 5 months later, we're looking to exit at 250K, agent and closing costs 18 grand, pay off the hard money, pay off the gap funding, and pay off the credit cards. So in that whole equation, we had the hard money come in at 80% of purchase and 100% of rehab. We had gap funding unsecured for 40 grand in account within 48 hours, and that covered the down payment of 34 grand, closing costs 5.1 in the EMD. Then the 0% business credit, 25K liquidated via Plastiq, covers the rehab float, paying contractors before the draw payment comes back in, holding costs of 8 grand, overrun buffer of 5K. So the net profit in this example would be 46 grand, total out of pocket 0, no equity partner, no profit split, and that's what 100% financing actually looks like. So who qualifies? You don't need a long track record or a large portfolio to access this stack. Gap funding starts typically at 650 plus credit score, verifiable income can be W2, self-employed, and personal credit utilization not already max. We'll get to what you can do if it is. So business credit stacking, personal score has to be at 700 plus for best results. You can run it at around 680, but you're going to want to wait these days. You need an LLC, even if it's a newly formed one. And for first-time investors, gap funding qualifies on credit profile, not deal history. So if your score is around that 650 mark with high utilization, we have a debt consolidation pathway that can actually move clients to 700, 720 in less than 30 days. Utilization on your personal credit accounts for about 30% of your FICO score. So it's the biggest lever you can pull to move your score quickly. If you've got a lot of credit card debt or auto loans, we'd consolidate that into one lower monthly payment. Now, here's the mistakes to avoid. Applying for business credit before gap funding. Gap funding uses a personal credit pool. So business credit applications create inquiries that compress your approval. The sequence is fixed for a reason. Gap funding first, every time. Mistaking a single layer product for 100% financing. If you're still expected to bring closing costs or reserves, that's not 100%. Know exactly what's covered before you commit. The third mistake is using a secured second lien as gap funding. A second lien conflicts with most hard money lenders' terms. Ask specifically, is this secured or unsecured? Fourthly, not getting pre-approved before making offers. This 24 to 72 hour deployment assumes your file's already been reviewed and we've got your pre-approval. So find out your capital ceiling before you're under contract and not freaking out one day before closing. Finally, underestimating total deal costs. So all 5 components, down payment, closing costs, initial rehab draw, holding costs and reserves must be covered. If anyone comes from your savings, the stack isn't complete. So let's go and close something. 100% financing is real. It's not a gimmick and it doesn't require a special deal, a wealthy partner, or convincing a seller to do seller financing. It requires knowing how to layer the right tools. Hard money for the bulk, gap funding for the down payment and closing costs, and 0% business credit for everything in between. And if you want to know exactly what you'd qualify for, book a free funding review at gapfunded.com/link below. It's just a soft pull, no hard credit check, takes 2 minutes, and you'll walk away with real numbers and a game plan. Best case scenario, we go and close something. I'm Mick Wadley, let's rock and roll.